This episode is brought to you by Global X. Since 2008, Global X ETFs has been committed to empowering investors with unexplored, intelligent solutions. Global X specializes in exchange-traded funds that offer exposure to the artificial intelligence ecosystem, including themes like data centers, robotics, semiconductors, and cloud computing. To learn more about Global X's entire suite of ETFs, from covered calls, fixed income, emerging markets, and more, visit globalxetfs.com.
From 11FS, this is Fintech Insider News. Give us a round of applause. I am David Brear, CEO here at 11FS, and we are going to be covering, it's happening. Klarna has finally filed for an IPO, but it's over in New York. Also, that Revolut is looking to become a proper bank, and the FCA wants banks to do more AI. We're going to find out what all of that means with a group of fantastic guests. First up, I have my co-host and 11FS colleague, Ross Gallagher, who is the head of ventures of 11FS. Give him a round of applause. How's it going, mate?
Yeah, really good. I love these.
It's it's nice. It's good to be back here again. Like, I missed the last one of these that you guys did, didn't I? But we're back here in the good old place.
It feels like a homecoming, doesn't it?
It does. It's weird. It's weird, but it's nice to be here. I'm going to get everybody on stage quickly, and then we can get on with the chat. But next up, we've got Alexandra Rivas-Gale, who is VP of Product at Clearbank.
Hello.
Welcome back. We were saying this time last year, we were doing this pretty much the same thing, right? So.
Yeah, and first time on a stage ever last year, so happy to be called back and I didn't totally mess it up. So here we are.
Yeah, we didn't know that the first time, else we would. No, I'm joking.
Obviously not.
But how's things going at Clearbank? How has the year been?
Yeah, it's been an incredible journey. I mean, in the last few months, we got a license, we have appointed a new group CPO. Lots going on in our space. Super excited to be here and lovely to see all these, some familiar faces and share my thoughts. So
very cool.
Happy to be here.
Busy year. All right. We'll probably unpack more of that as we get into it as well. But next up for an After Dark debut, we've got Benady. I'm saying that wrong, aren't I? CEO at Swan. How you doing?
Hi.
How's it going, Nico? You good?
I'm good.
For anybody who doesn't know, what does Swan do?
Swan, we're an embedded banking platform. So we are the Europe embedded banking platform.
Very, very cool. Well, plenty of that to get into as the stories unfold as we go as well. And last but very, very no means least, making her 30th Fintech Insider appearance, which is ridiculous. I feel like we need hype music for you to get on the stage at this stage. Valentina Kristensen, Director of Corporate Affairs at OakNorth.
That was almost like a WWE style entrance.
Yeah. Definitely we need entrance music, we need lighting, fireworks for you, Val. How the hell, 30 Fintech Insider episodes? That's weird. Feels like 2 seconds ago you did the first one.
No, but look, you guys create an amazing platform for people like me, and it's opened so many doors for me, so I can only say thank you guys for inviting me back.
Tell the story you told backstage about your first debut on Fintech Insider was memorable for many a reason.
It was. So my boss, OakNorth's co-founder and CEO, Rishi Khosla, had sort of told me, look, you're going to go and do this and, start being a bit of a spokesperson for OakNorth. And I was really nervous and I was really annoyed because I actually had a first date later that evening, and I was sort of like, I'm going to go to this podcast recording, I'm going to be all nervous, then I'm going to go on the date, and
and to be honest, she turned up looking real glam. She went out, first impression on that date was probably really good as well.
But look, you guys were so great and made me feel so welcome and comfortable. So, it went well, the podcast, and so I went to the date actually full of confidence and sort of thought, you know what, I don't even care if this is a crap date. I've had such a good day. And I ended up, marrying the guy, and so.
And it's going to start sounding like I'm still a black as well here at this stage, but that doesn't really resonate with young people. Blind date, it was a thing. Look it up. But he researched what you actually said on the podcast, you said.
He did. He then actually listened to the episode and had a great excuse to then call me up and be like, God, I can't believe that was your first time. You're a natural. Yeah. So
your point, your third point on the FCA regulation about this, I mean, if you're going to try and impress somebody, that makes sense, doesn't it? Anyway, we better get on with what we're doing. But I mean, big couple of weeks for you at OakNorth as well?
Yes, yeah, we put out our results last week. So we surpassed £200 million in pre-tax profit. So really fantastic milestone for the business. And then did a bit of shopping on Monday, bought a bank in the US, Community Unity Bank based out of Michigan, which is a fantastic bank. They started operating in October 2023, but very entrepreneurial and entrepreneur-led. So a great business to be working with, and will really help accelerate our growth in the US.
Very, very cool. All right, well, we better get on with the news because there's a load of things that have been happening over the last couple of weeks that we've sort of picked up. If we get into the first story, it was one that was covered by a lot of different places, all of the speculation around it, but we picked it up in TechCrunch. Klarna files for potentially Blockbuster IPO. So we sort of say, insert the office, it's happening, guys, meme here, because Klarna has taken the big step in its long-awaited US IPO. The company has made its F1. You said there was another form as well?
F1 or S1.
Right. Big form, like they've done a big form, basically. Prospectus, then made it public as it aims to raise at least another $1 billion at a $15 billion valuation. The exact details and the share count, price range, et cetera, are not public yet. So we don't really know the exact detail of actually what Klarna are doing. Klarna have rebounded from a valuation now at $14.6 billion, thanks to new investors at its first reported profit, making $24 million in 2024 compared to $244 million loss in 2023. I mean, this is an interesting, wasn't it? Gigantic fintech company decides to go and do a thing, but doing it in the US as well. I mean, go on, Val, seeing as you've been here so many times, let's go to you first.
Yeah, I mean, look, I think obviously we've had quite a quiet IPO market for some time, so I think it's at least from a fintech perspective. So it's great to see that hopefully there's a little bit more movement happening there. It's been quiet even in the US. If anyone's had an opportunity to do the hundreds of pages of reading of the form, it makes for very interesting reading. I think there's obviously a lot to unpack there. A lot of things that I sort of hadn't quite appreciated. I mean, I think we all read the headlines about Klarna sort of investing in AI in terms of customer relationship management, and that's helped them to sort of save about 700 jobs or so. But I think that's been very interesting to see those sort of efficiency gains that they've been making. A few other things they sort of talked about in the document. They're closing a few offices, so closing offices in Columbus, Ohio, in Amsterdam, one in Germany, and they did cut their headcount quite substantially, about 2,000 or so people at the end of 24. So a few things there, but I think it's obviously a very interesting company, and it's going to be interesting to see what the reception is when the IPO happens.
Yeah. What do you think, Ross? IPO with big fintechs finally getting around to it, or?
Well, I think first of all, what I love about this podcast is how accessible we make things. Like they did a big form. I think we've all learned something already, haven't we?
Yeah. Did everybody learn something there? They did a big form. Yeah.
I think it's huge news. I think you described it as blockbuster news, and I think that's exactly right. I think we've sort of, when we think about that, almost that fintech kind of hype cycle and everything that we saw sort of pre-2021 in terms of momentum, VC capital, et cetera, and then equally really just how rapidly that dried up sort of post-2021, and we saw a huge amount of, almost fintech sort of shutting their doors, consolidations, et cetera, and actually it's great to see a strong fintech come out the other side. They've announced their first profits this year, as you said, which again just shows really strong fundamentals. I think, Val, to your point about looking at ways to cut costs and closing offices and all of that sort of stuff, I suppose that's to be expected given what's coming on the horizon. But in all honesty, I think it's a huge fintech success, and actually it feels like a bit of a watershed. I think it's really, really big.
It's an interesting your point on the profit. I mean, 21 million of profit compared to the previous year of 244 million of losses. I feel like I need a few more data points on that graph to draw a line on to understand it a little bit more. But yeah, I mean, it's a big move, isn't it? What do we think about doing it in the US? I feel like it's a weird one that I'm going to come to you on this one, Alex, being our American friend.
Obviously.
Yeah. Talk to us about America.
Yeah. Do you have all night? So I think there's a lot to kind of be said, obviously, as you were saying, 2021, a lot of things dried up, and there's been eyes set on what to do next. Where do you take your company? How do you look at it from a global lens? I think from Klarna's perspective, massive market for them in America. We were chatting about this quite a lot backstage. The buy now, pay later, kind of the consumer there, massive opportunities, right? Huge potential. The consumer behaviors there really warrant to that. So I think there's a lot to be said of actually bringing it to the US and having that end consumer kind of see this big IPO and see it in the headlines actually bolsters a lot of valuation and a lot of the company's kind of outcomes I think they're seeking. But I also think we have to think about why not the UK? Why not in other exchanges? I mean, we have kind of seen that pausing in the UK market, particularly for fintech. But as Val rightfully said, backstage, there's still other amazing things happening in the UK, just in other sectors. So I think we just look at the decisions being made by fintechs are incredibly nuanced, and it depends on who's the consumers at the end, who are the investors backing it, what do they ultimately want out of this? But I think my key question is what will happen next post-event? As we all probably are going to be sitting kind of watching the headlines, when they IPO, what will happen? Will the valuation go down? We've seen, I think, from 2016 till now, 12 different EU fintechs or tech companies IPO'd in the US. 50% of them, valuation fell to the floor. So there is a lot to think about when you're going into these various markets. But I mean, tremendously exciting. And I think there's lots of other fintechs in the UK and around kind of eagerly waiting, I'd say, to see what happens so that they can make their move. So it'll be a lot to unpack on what happens next.
Yeah. Firstly, I guess on that is, it makes me feel like we need to be more rock and roll backstage than we have been being. So, like Jay-Z performed here, pretty sure they weren't talking about fucking IPOs backstage beforehand,
You never know.
Way more interesting things. But yeah, I mean, it is an amazing time, really, given the maturity of where we're getting to from a market perspective. But I guess it's like what we've seen in fintech more broadly, right? It's mainstream now, like in a great way, right? The scale of customers we can get to and the impact that we can have. But what do you think, Nico? Is this a sort of a point in time trajectory we're seeing, or is it a sign of something else?
Well, what I find very interesting, yes, we can see maturity for huge fintechs like Klarna and of course so many other companies. But what strikes me is how long it took them to go there, to make it. And we often talk about profitability. We often talk about efficiency. So I think efficiency is super important today, especially compared to 21 when everybody talked about growth and growth and growth. But what we don't realize is to become profitable is the amount, it's so capital intensive. It took them so much time. You need so much volume to become profitable for fintech. And well, at Swan, we're on this journey to IPO one day, so we are not there yet. But we realize that, wow, it's much more difficult than what we imagined at the beginning of the day. Building fintech is really, really difficult, and to make it, you need to be efficient, but also you need a massive volume to make it. So if some of you are fintech founders, just keep in mind that it's good to be profitable, but before that, you need to invest a lot. And so you will only be profitable once you reach really a nice volume.
I guess on that as well, I mean, is IPOs the target? Like, is that the thing you want?
I mean, so look, Klarna was profitable before, but then they went back into the red when they sort of invested heavily in their US growth. I'd sort of say, actually, you don't have to reach a huge scale to become profitable. I mean, OakNorth reached cash flow break even after 11 months, and we've been profitable every year since. So we're going on to 10-year anniversary in September. So I think, it depends on the type of business, of course. And yeah, IPO is definitely not the destination, right? I think that's just a step in the journey. I think the thing that's potentially really exciting is obviously there are a lot of employees who have worked at Klarna over the years or who are working there now who have skin in the game and equity in their business, and they're going to see a little bit more liquidity. They might have had some secondary rounds, they might have had other ways that they could have unlocked some of the capital, but that means there's going to be people who will overnight, in theory, have a lot more cash in the bank, and that means that there's a whole bunch of people out there who could go on to build new fintechs and become entrepreneurs themselves, and they would have the capital to do that, and I think that's super exciting because you're going to see a lot of those businesses coming and a lot of those people coming out of Klarna. We've already got obviously loads of great alumni coming out of Klarna, and I think now you'll just see even more post-IPO. So that's super exciting as well.
But I think as well, every fintech, every business is unique, right? Like every founding team or executive team is going to make a decision that's right for that business at that point in time. And there's, Val, something we've talked about recently is like the difference between founder-led businesses and maybe not wanting to take on outside capital, for example, because they might lose control of the direction of the business, et cetera. And so, I think there's a lot of factors to consider when you're thinking about, is this right for my business? And I think it's going to be, the decision that each business gets to is going to be different from everyone else. I think that's why it's always tempting, isn't it, to look at this and go, oh, is this the start of a wider trend? And does that mean Monzo and all of these others are going to start to go down the same route? Not necessarily.
I mean, that's an interesting point, isn't it? A lot of people leave big corporate organizations because they're shareholder focused over customer focused. And you almost go, I've said this before, it's like that, you'll never become your dad, you'll never become your parents. And then fast forward 30 years and you're like, shit, you did it. So, what do you think though, Ross, about doing it in the US thing? And we've had Nicolas at Revolut coming out and saying, doing it in London just isn't rational. Obviously, we're talking about Klarna. I think TS at Monzo has sort of made slight kissy faces at doing it in the US if they ever did do it. Is this a trend of the US is just a bit more appealing?
Yep.
We'll move on then.
But look, I think it's indicative of a wider issue with sort of brand UK at the moment, right? We're, I think, forecasted to be the slowest growing nation in the G7 from an economic growth perspective. There's some. There was a report that's just been released by the FT that shows that in 2024, the businesses that went public in the UK raised the least amount on record. There are concerns there around valuations, concerns around liquidity, and I don't think this is necessarily something that's going to get addressed and turned around really quickly. There is a fundamental problem there that needs to be addressed, and it's not just around the London Stock Exchange and going public. I think it's actually indicative of a much bigger issue.
I feel like we're...
But maybe some exciting news now.
Somebody have some positivity, quick.
But I do think there's things that are being done to address some of these challenges. We see the Unicorn Committee being set up with Innovate Finance. Charles McManus.
That's the most exciting committee name ever as well.
Yeah, I love it. Unicorn, I love it. Just the name makes you excited. But I think there are things to address these challenges, and we see business leaders, Charles McManus, our board member, a massive voice on that group to push the UK and kind of say, what can we do to change these outcomes? And I think the UK is an amazing place for so many reasons to foster kind of new fintechs and growing businesses. But I think we have to kind of look at what are the complications and challenges that are creating the slowdown, and what are we going to do about it to continue to foster the culture that bring new businesses, bring new ideas, continue to have this unicorn council and move things forward.
I mean, look, obviously, Pisces is sort of closed for consultation, but Pisces is sort of another way that, London is looking to sort of revitalize the market and, do sort of secondary trading. I kind of think it's just a very British thing. And I can say that as I'm not British, but, it's a very British thing, to sort of, to kind of compare against, the US. And it's sort of like, if you're trying to win in
our cousins, they'll be back. They'll be back one day.
But trying to compare on tech listings is it's a fight that the UK will just never win. I think, to your point, Alex, it's like playing to the strengths. Life sciences, biomedicine, emerging market businesses, energy. Those are sectors where London absolutely could be the exchange and is the exchange, the default exchange and the exchange of choice. And I think actually putting all that resource and time into doubling down on where we have a real chance of winning is probably a better choice than to put all this energy into tech. I mean, Apple's market cap is $3.2 trillion. That the GDP of the UK is $3.4 trillion. I mean, it's just crazy, right? The scale. And so I just think you have to, try and play to your strengths and focus on the areas where you're going to win and where you have a right to win.
Yeah, definitely. All right, we're going to have to move on because we could talk about this one for a lot longer, and you've got all of the stats, everybody, so we could definitely go on for a lot longer. But we mentioned Revolut a second ago, and actually they're part of the next story. So we picked this one up at payments, but Revolut goes on a hiring spree to prep mobilization for their UK banking license. Revolut is ramping up its UK banking expansion, hiring another hundreds staffers as it builds out to its recently approved banking operations. It's finally secured its UK banking license last summer, and it currently is testing its banking systems with a small group of customers, with full approval expected by July, allowing it to transition millions of users in its UK entity onto that full banking capability. It is also tracked to report a record $1 billion in profit before tax for 2024. Dang, that's a big old number, isn't it? Nearly doubling last year's total of $554 million. However, CEO Nick Storonsky has admitted that expanding without a banking license was a bit of a mistake, while Revolut also explores private banking and a bunch of other opportunities that they're looking at. Is anybody here from Revolut today?
Would they tell us if they were?
Is anybody here from Revolut but shy that I'm about to ask you a question? Yeah, you're lying, aren't you? All right. It's interesting, isn't it? Like, I guess we sort of thought they were a bank, but now they're really a bank. But there's but it's interesting almost what's happened since a license been approved is a lot, right? Go on, Nick.
Massively. I mean, I'll start. Clearbank recently started banking Revolut, which is incredibly exciting, offering instant access savings accounts. So if you're interested, check them out. But no, it's fantastic to just see what Revolut's been able to achieve, and the growth trajectory that they've had have been absolutely sensational. I think looking at what does it mean to have a banking license? What does it mean to be a bank? You hold money, you move money, you transform money, you lend money. So if you kind of compartmentalize banking into those very four simple boxes, you start to think about, well, Revolut are looking to kind of grow their business and have all of these diversified revenue streams so that they can create more for the end consumer. They ultimately started as really a cross-borders business, and now they've kind of looked at, they hit a bit of a, right, we can do more. Now we can offer interest to our customers really easily. We can hold money. We can continue to grow our balance sheet so that we can take that and go into the lending space and double down on those types of footprints they want to do globally. So I think it's just showing, like, it is showing their ability to continue to drive their brand in the right way. The credibility with the regulator, that's fantastic. Getting a license, a banking license, I've been through it with the European license recently. It's not an easy feat. And so it is something it's fantastic to kind of see their roots being set in the UK, their new office opening in Canary Wharf, and just ultimately what they're looking to do to continue to transform the business. But at the end of the day, they are doing amazing things for the end consumer. I mean, if you think about what they actually offer and the benefits that you get, just having a Revolut card and all of the things that you're able to achieve with that, it is incredible. And so from the way that I see it, how the visions that they've set is they really have solved problems in that sort of banking space. And they do it at such a pace that you kind of blink in another article the next week with another amazing product that they've put on. So I think it just shows their ability to kind of look at, it's not an easy feat to get a license. They kind of went through their own path to get there, and probably a lot of lessons learned that they've gotten through. But I think it's for them, being a bank means you'd have other opportunities to do more for the end consumer. And I think that's just how they're looking at it, is what are the plays, how do they want to enter into new different types of markets, whether it's lending, et cetera, to ultimately grow their book.
Yeah. It's a funny one. I mean, people have been a bit snooty about Revolut over the years of like, yeah, they've got loads of customers, but are they making profit? Yeah, they're making loads of profit. So what's your thing now? Or like, what's the defense?
They'll never get salaries though, right?
Yeah, exactly. So it's like, it feels like similar to the Klarna story where it's like, yeah, they're at that point of maturity where they're doing so well now and have acquired so many customers. But I guess to that point, Val, about what it means to be a bank, like this is this is a different chapter, I guess.
Totally. I mean, look, they're in mobilization now, right? So they haven't got the full license. They haven't got, they're sort of in like, I remember when OakNorth was in mobilization between March 2015 and September 2015, and it's like a weird time where you're sort of like having to really keep track of how many customers you have and things, and kind of have your homework marked on a very regular basis. And I think, as you say, I mean, a banking license does bring, a huge amount of benefits. It gives you a very low cost of funding. It gives you the ability to then use those funds to lend and do other things. But it also brings, a lot of additional scrutiny, a lot of additional regulation, and also a lot more bills to pay, right? You've got the Bank of England levy, you've got the corporation tax surcharge. I mean, not to bore everybody in the audience, but basically we pay 3% more corporation tax on any profits over 100 million pounds. So, $1 billion of profit. So, you can do the maths there of what they'll be paying in additional tax. And I think those are things that, of course, they would have thought through. The same with, MREL and risk ratings and Basel III and all the things that will impact them now, come the full license in July, I think they're predicting. So they would have thought through all of that and sort of said, okay, well, we still think the pros outweigh the cons. But there's definitely a lot of additional things that come with being a bank. And it's going to be interesting to see, what they're going to do once they've got the full license. They've obviously talked about, private banking, commercial real estate is another area that I think they said they're going into or at least exploring. And I think that's one of the great things about Revolut is that they always got loads of experiments on the go. They're very happy to fail fast, and they're very happy to admit failure and sort of put their hands up and say, okay, we didn't get that product quite right, so we're moving on to something else. That's probably why they have such a big team, right? I mean, they're on a hiring spree at the moment. I think was the headline in the article, but they've got like 12,000 employees globally. It's just absolutely massive. That's a whole army of people, and I mean, certainly much more than the sort of the new banks and the Chimes of the world.
Yeah. What do you think? They're going from strength to strength at this stage, huh?
Well, what I find funny is that I was very surprised to learn that Revolut wasn't a bank in UK, because actually they've been a bank in Europe for quite a long time. So for me, it was quite surprising because for me, the FCA was less strict than European regulators, but it happened that for Revolut, at least, Revolut has been a bank for, I don't know, maybe 2 or 3 years in Lithuania, and they even they established themselves in many countries. So, for instance, in France, they have a French IBAN. In Germany, it's exactly the same. And but by the end of the day, what's interesting is they got a huge success in UK without being a bank. And when you look at the kind of banking services, not banking services, but payment services, I would say, that you can get with only an e-money institution, it doesn't make that much big difference. Of course, there are some services you can't offer when you're only an e-money institution, but look at what they could do only with their e-money institution. And actually, we see the kind of same thing in Europe with there is a big battle for SMB banking, I would say, in Europe, with the like of, so you have Tide, you have Monzo and Revolut for business, of course, here, but in Europe we have such battle with Conto, with Revolut Business, and well, with Swan ourselves in a way, and many of us, we're only e-money institutions, and well, that's enough, and it's interesting to see how long you can stay with this e-money license before deciding to become a bank, which comes with, as you say, more power. You can offer new services. Some things are cheaper, but which come with a lot of responsibilities and costs.
Yeah, I mean, we've seen it as a model in the UK quite a lot with, obviously, I mean, Tide started on e-money before they moved to Clearbank, and Monzo started with e-money right at the beginning in that process.
It just works.
The protections for customers are not a million miles away, but I think it's almost the ticket to ride into the bigger game. Do you think we'll start to see Revolut do more broader spend financial services now? So you mentioned private banking, but are we going to see mortgages? Are we going to see, the full gambit of everything in the retail banking?
Yeah, and more, right? I think to your question about, what does it mean to be a bank? I think it means something different to Revolut than it does to everybody else. I love a Revolut story, right? Like to your point about the profit numbers, you do kind of like step back and go, whoa, like I need to read that number again. Is that right? And so they're just constantly like pushing further, reinventing. Revolut has a packaged product called Revolut Ultra that is £45 a month. And it's there because people are buying it and paying for it and getting value from it. I can't see that from any other bank and people signing up for it. It's because Revolut it's like holding a ground that I just don't think there's any other financial services player right now that is playing in that same space. And I just, yes, so all right, fine, the mortgage is the traditional financial products, but then that's not the end game. I think in terms of what we've seen from Revolut, what they've done around crypto, what they've done around trading and stock picking and all of that sort of stuff, that's not the outer bounds of their ambition. They're going to go further and further and further.
And that's also something crucial to increasing the deposits, the deposit balances, average deposit balances that they have on their books, right? I think right now it's a few hundred on average. I think it was like £300 or so in their last annual report. So obviously the license will give the consumer that FSCS protection up to £85,000. That's going to be a big driver in terms of getting those larger deposits, and getting those larger sort of tickets in terms of mortgages and things. So that will be another big driver. Obviously they are making a good chunk of their profit off of interest rates and the cash deposits that they're holding. So the more deposits they can take in, the more that those profits will go up, assuming that interest rates don't go back down to 0.75% for 13 years. So you can then see, okay, there's another big revenue driver as well in terms of getting the license, which will offset those additional costs they might have to face from being a bank.
Yeah, it's going to be amazing to see what they do with the scale as well. Being so big in so many different geographies opens up just a different level of potential for, international travelers and various different markets, particularly in that premium space, as you say. It's going to be fascinating.
Yeah, and what's interesting is as far as I know, there is no global bank with the same information system. In almost every region, banks are super domestic. So you have French banks, you have British banks, you have American banks, Mexican banks, but really Revolut is trying to make this a global bank. Let's see.
It's probably the first one that started from central ground and going east and west. If you kind of think HSBC coming from, well, depending on where you believe the boat started, it's either Hong Kong or the UK. You've got people like Citi going from the US sort of east. But yeah, I mean, it's an interesting place to start.
But if you look at HSBC, they acquired many banks in every country. So it's not exactly the same than Revolut, who
Very true.
truly built themselves the core banking system.
I mean, I think they make a point of saying it's almost a singular code base, which is that's an amazing place to be, isn't it?
And I think they're very clever about and very calculated about how they're entering these markets and what they're doing and kind of the fail fast theory, but also the partnerships that they're doing. I think they partner really fast. They think about how do they become a market entrant and how do they make a splash to actually capture the end consumer. So I think they're incredibly clever about also how they're actually entering in the markets and the partnerships that they carry, because I think that also supports them in some of the local markets that they enter into. So whether it's in Europe or the UK or sort of wherever else they are, I think that is a really interesting way that they also kind of bring themselves into the market. They learn from the others around them who dominate in certain segments, and then they come in and get quite a good market share from that, which I think is an incredibly clever strategy.
Great.
And I think, just a final point, I guess, on from our perspective is obviously the license, getting the UK license was a big tick in the box to try and move towards getting the US license, and that's the big fish, right? I mean, that's as you say, our cousins across the pond that they want to, obviously land. I think they've got about 2 million or so customers there at the moment out of their 50 million. So there's a lot of low-hanging fruit and a lot of customers that they could acquire over there if they can get the license. So should they get the full UK license in this summer, that will kind of open the pathway for them to then reopen conversations with US regulators for a de novo.
Yeah. Go on then, Ross, close us out.
Well, I just think if I was sitting in one of the incumbent banks right now looking out at Revolut, it would be tempting to think about them as a bank in the same way that you are. They've just got their banking license, they've got 10 million UK customers, they've just got their great big 10,000 person HQ in Canary Wharf with their name on it, feels like a bank. But just to reiterate the point that I made earlier, I just think they're playing a different game. And I think if you think that this is it and you've been disrupted, okay, they've got 10 million customers and this is kind of it, now we're all just going to play nicely. I just don't think that's the way this is going to go.
Whatever the game is they're playing, they seem to be winning. So that'll work for them.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralized security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alicabank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
This episode is brought to you by Audi. The road is calling. Embrace the thrill of the drive with the all-new, fully electric Audi Q6 e-tron. Featuring effortless power, serious acceleration, and advanced Audi tech. It's not just a new EV, it's a new way to experience driving. The all-new, fully electric Audi Q6 e-tron is here. The next chapter of Audi starts now.
All right, well, we better get back on with the news then, because there's a lot of stuff still to cover. And this was an interesting one, and I sort of introduced it a little bit earlier on in a weird way, which is FCA says do more AI, but the reality of this, I picked up on for an extra, but FCA seeks regulatory clarity over lacklustre AI adoption by UK banks, which is much harder to say after a couple of years, I'm not gonna lie. The FCA is stepping in to address slow AI adoption in the UK banking, citing regulatory uncertainty as a major roadblock. What I don't get there is the FCA saying that regulatory roadblock is what's holding, because they do the regs, don't they?
It kind of sounds like an FCA problem, right?
Yeah.
Not a bank problem.
Yeah. But anyway, a recent FCA and Bank of England survey found that data protection and consumer duty rules are amongst the top concerns preventing financial institutions from investing much more in AI. The FCA says some firms lack confidence in developing and deploying AI due to uncertainty about how existing regulations apply. To tackle this, the FCA will host a roundtable. Good old roundtables, that'll solve everything, won't it? With banking leaders in May, aiming to clarify compliance requirements and support responsible AI innovation. That sounds like a laugh, doesn't it? What do you think? I mean, is this a bit of a weird, do more AI, you banks, What does that mean? Anybody?
Yeah, I mean, it's a bit of there's so many things here. I think, the timing is strange. I'm also isn't this what the Regulatory Innovation Office is supposed to be? That's their whole mandate is sort of to see how we can reduce regulatory barriers to innovation, including new technologies like AI. They love a roundtable, they love a consultation. There's a consultation open last month. It's open till, I think, 11th of April. So if anybody wants to, give their feedback on AI and financial services, you can find it. Bank of England's got this consultation live at the moment.
I've been to some of those.
Yes,
I've been invited along to go and be part of those things, and I feel almost like I'm invited like a court jester. Do you know what I mean? Like that fresh entertainment bit on the side of it.
Because they've been to a couple of after darks and they've seen you in action.
I'm not going to say is anybody from the FCA here, because based on the Revolut one, everybody's scared to put their hands up. So, hello, I know you're here.
But no, I mean, the timing's obviously, quite strange. There's this huge motor finance scandal going on right now in banking. HSBC analysts said that they thought that would, that could end up being in sort of 44 billion total compensation across the various banks, and several banks have sort of publicly disclosed the numbers that they've put aside to pay compensation, and sort of being in a roundtable with some banks a few weeks ago, and one of them sort of said it was like we were driving 50 down a road when that was the speed limit, and then 2 weeks later the speed limit changed to 40, and then we got a speeding ticket, and it was like, oh well, you were speeding, and it was like, well, we were speeding when it was 50. We weren't speeding when it was 50, but you've changed it to 40, and this is what they said. Motor finance felt like that the regulation had changed sort of after the fact. And so I think there's a lot of skepticism and worry amongst banks to sort of invest in AI and go deep into AI when they know that they've got, potentially very large fines to pay and compensation in terms of motor finance. And they're sort of like, what if you change the rules after? And we've then gone down this rabbit hole, and then you decide, actually, that's not the way we want to do things.
Yeah. Do you think that's the issue here, Ross? I mean, because it is a little bit like, go do stuff, but if you fuck up in ways I haven't thought of yet, we will prosecute you.
Well, yeah, I mean, it has to be. But, you read the line in your intro about, like, the FCA believes that banks aren't doing enough around AI because they don't understand the regulations. Well, that's the first part, right? I mean, that's definitely an FCA problem. And I think there's a wider culture which is very risk averse in banks. And I think that retrospective punishment that Val talked about is absolutely at the core of that, whether it's car financing, whether it's PPI. It's kind of like, okay, go and do whatever, and the regulation is what the regulation is today. But then if the regulation changes in the future, then we're really going to come for you, and the scale of that punishment is going to be infinite. You are kind of going to go, well, we'll probably play it safe.
Yeah, that makes for quite a weird relationship, though, doesn't it? It's like when you get into an argument with your partner, and they're like, that time in 2008 when you missold PPI, and it's like, whoa, where did that come from? So do we sort of need that maybe change in the process there to make it? Oh, we were saying you looked at like statute of limitations. You need to I could only get in trouble for 4 years on this one, and then it's over,
But I also think we have to think about, AI is just yet another buzzword in the industry, right? Last year it was digital assets. Before that it was cross-border. I think, first of all, it's not the regulator who's protecting the end consumers coming out and saying we need more AI. Great. But what does that actually mean? Because there's a whole raft of different things that you can actually implement for a bank. You can use it for operational efficiencies. Brilliant. To be honest, lots and lots and lots of companies are using it now to become more operationally efficient. But if we're looking at actually how do we make decisions for an end consumer, or how do we potentially change the way in which banks work, we may be also impacting the job market. So what happens to all of these jobs? Klarna is a great example. They brought in AI, 700 jobs no longer in use because AI replaced it. Now, that's obviously quite a inflated argument. There's lots and lots of ways that you can, skin a cat. But I think if we kind of think about the fundamentals, what are we actually achieving as banks? We are providing financial services for end customers to move and use their daily bank account every single day. So if we use AI, we can do that in many different ways, but at the end of the day, we also have to go back to the fundamentals. There is bias in the way in which AI is used in some capacity that could impact decision-making models, that could impact the end customer. So I think as the FCA is kind of formulating their ideas and looking actually at what do they want banks to do, I think we also have to think about, as a community, what do we want to achieve, and how are we going to use such tools and super powerful tools and technology to enable great outcomes, but also protecting the end consumer? And also, we have to look at how do we look at the job market in the UK? There could be a lot of domino effects to how banks start to adapt to different technologies.
Yeah, it is interesting. That point you make about almost the pressure of, a couple of years ago, it was everybody doing, talk about how your solution is a distributed ledger. And it's like, oh, okay. As somebody, building a business, so what's your AI strategy? Have you been asked this repeatedly? Investors, definitely, right?
Of course, we must have an AI strategy. And I don't fully agree with what you've said before, that this is the buzzword of the year. No, I don't think so. Well, digital assets were something, cross-border was something, but come on. AI is definitely the most radical innovation we've seen for decades. And I think it will definitely disrupt our industry. And if we don't see it, it's so obvious. And so I think the risk for AI is not regulation. It's just falling behind. And of course, yes, my investors always ask me, so what's your plan? What's your plan not for next year? What's your plan for next month? And so, of course, the first things we're working on with AI, of course, there is support, which is the obvious thing that can work for any type of industry. But AI can really bring a lot of stuff for KYCs, for transaction monitoring, and for many other operational efficiencies. But KYCs and transaction monitoring first. I think it's quite obvious.
Is it? Is it a new thing? Is this really AI is such a I know the last After Dark was in a church, but it was such a broad church, isn't it? That when you say AI, it can mean a sort of a plethora of things that different people are kind of doing with it. Like, are banks like new to this market, Val, or is this something they've been doing for, decades and decades and decades?
Yeah, you're right. And maybe for transaction monitoring especially, we've seen machine learning, who is a kind of AI, and who exists for years. But there's something new. It's Gen AI, and this is new. And this is something that will definitely bring so much operational efficiency. So yes, there will be some job loss in our industry for sure.
Yeah, I guess that's because we've seen a lot of different banks do sort of interrogate PDFs and pull information out of policy information or terms and conditions or all those terms. And I think that's great because essentially, who wants to flick through a 400-page PDF to find that thing? But is that not just better search? Is there something more?
I mean, that's the thing, right? I think obviously Gen AI has just brought, so tools like ChatGPT or Claude have just brought it into the hands of everyday people and made them feel like, oh my God, I know how to use AI now. But as you say, I mean, there's been, predecessors, and machine learning models have been used for credit modeling for like decades, right? I mean, that's how banks are able to assess risk. Typically, 9 quarters out, but certainly banks like OakNorth are trying to assess risk, years, if not decades out, when you're looking at things like climate risk. So yeah, I mean, I think banks have been using a degree of AI, but it's just Gen AI is the sort of the topic du jour, and there'll be iterations. Certainly, we're now talking about agentic AI and the different prompts that you put in and how that can impact the results that you get. Will it replace search? I mean, certainly it's replaced search for me for a number of things, and it helps me with a lot of other things. And, you talked about KYC and AML. I mean, just training in a bank, right? You have to do so much training within a bank. So
have you done that? Have you?
We have.
Has it replaced Google for you from a search perspective?
Totally, for loads of things.
Yeah.
Because I can just get a much fuller picture, and then I can sort of ask follow-up questions, and it knows the conversation that I've just had. So from my perspective, yeah. But I think the other thing is also, as you say, I mean, you might have some new regulation. If you're more of an oratory listener or oratory learner like me, then actually being able to put a PDF into, let's say Notebook LM, and be able to then turn that into a 15-minute podcast, that's information that I'm going to digest much more easily than reading 60 pages.
I'd be interested in the audience, like who, if you were going to look something up, what would you do? Stick your hand up if you would use ChatGPT over Google. Wow, that's pretty well over 50% of the audience then that would actually do it. And like I say, that's a shift in behavior. How often, because Jason Bates, one of the co-founders of 11FS, he's done that. And I find it a bit weird because I asked him a quite simple question on Slack and he sent me a 27-page well-researched summary of the thing. I just wanted a yes or no. Do you know what I mean? Like, it was like, do you think this is good? Here's an essay you have to read. And I'm like, I just want then you used ChatGPT to basically summarize the 27 pages that he sent me just down to a yes or no. But
what we're talking about now are use cases.
Yeah.
Whereas we started this conversation talking about the technology, and Alexandra, I think you're exactly right, in that everybody wants to talk about the technology and the headlines are all about the technology. Let's talk about the use cases and then understand, all right, what's the best technology to apply to solving that problem. And also, the headlines are always AI replaces people. What about, instead of talking about AI replaces people, let's talk about, all right, well, where are the synergies? How do you augment people with AI? It's that classic thing of like, let the AI do the menial stuff so I can do the creative stuff and all of that stuff that I'm actually really passionate about. Well, what does that look like in banking? And actually where banks really are going to start to fall behind is where nefarious actors, fraudsters, etc., they have access to these technologies. They're going to use these technologies to attack banks, to attack customers, and banks need to be able to fight back. And the only way to fight back is with these technologies.
And it's also not just about in their own organizations, right? I mean, I don't know, so I read a very interesting article in The Economist a few months ago, and the biggest employee, the biggest job, the biggest thing that it hires that people are employed in globally is driving. So you think about every Uber driver, every Deliveroo driver, every bus driver, every train driver. Those are the skills and the jobs that will be replaced eventually, by AI, and even Uber's CEO has said, like, I think for our drivers, you've got like 15 years left in a job, and in 15 years, like, there is going to be autonomous vehicles and self-driving cars. That's where then the banks and the financial services, they need to be thinking about how does that impact the consumer? Because if that's the job that most people in the world do today, if that's going to be gone in 15 years, how does that impact people's ability to pay their mortgages, to put money into a pension, to pay their kids' nursery fees or what have you? So I think there's just, that's the thing that from an AI perspective, it's actually looking at what the potential, consequences are in a decade or two's time for those customers of theirs.
Yeah, and I think you hit the nail on the head, and it really comes back to those exact use cases. It's an evolution. So I think as it evolves, as we see banks adopt it and other industries adopting it, what are we going to do about it? It will spark more incredible and exciting ideas. And I think we're just going to see the snowball of actually more innovation coming out of it. I think it's, as you said, though, we have to think about, the FCA, do more AI. It's actually, what are the use cases that we're actually asking banks to look at? And I think that's incredibly important and powerful, of being really intentional about the way that you're going to do it. Because if you're not doing it, you're going to be behind, and you're going to be left behind, and there's no catching up. Because once you kind of lose the horses out of the gates, you've lost them. And so I think it's also about, how do you have a really succinct and clear strategy to make sure you're making the right decisions on how your bank or fintech or company will use these types of technologies, right? I mean, transaction monitoring, it is a no-brainer. Operational efficiencies internally is a no-brainer, and there's so many benefits and outcomes. But I think it's being really intentional to make sure, first, probably do it in looking at certain phases and use cases to evolve those areas while other parts of it catch up.
Yeah.
So it's going to be a tremendously exciting time, and we're going to see a hell of a lot of change, I think, in the next 10 years. We're going to see a vastly different financial services segment than we have before.
Yeah, that's exciting, isn't it? God, that feels like an uplift. Thank God we got it to an uplifting place to leave it on an end. But like you say, it's actually, there's so many great use cases in the back office to basically plug gaps and get better at doing things. But ultimately, the thing that we're going is almost full circle to kind of like old-fashioned experience. Like, you want a branch manager to explain it to you in terms you understand. Well, actually, that can be done without you feeling stupid and without having to ask those stupid questions. Like, you want a better interface for those things, you can do that. It feels like kind of the banking in the way that you want it, doesn't it? So it feels like a marketing slogan. My bad, guys. Go on, Nick.
Well, that's true. I think if you think banking usage, I think won't be revolutionized by AI. Unlike other industry, I don't know, photo editing, or where it's obvious. It's really on the back office side that there is a revolution, because in order to run a bank, you needed before 1,000 people, and maybe in 2 years it would be 50 people. And this is the biggest revolution with AI. Not the usage for people.
What will we all do then? What will we do?
Just more of this.
Yeah, more of this. Yeah, drinking and podcasting at that point, I guess. But all right. On that note, we're probably going to have to wrap up, because there's all of the fun and sort of frivolities to do after this as well. On that note, it's time to say goodbye. So thank you so much to the guests, and thanks again to the sponsors, Swan, Haymack, and Frank Wright. For those of you on the show, where can people learn a little bit more about you and the things you do? Ross?
You can find more about me on LinkedIn, Ross Gallagher, and 11fs.com.
Very good. Alex, where can people learn more?
You can find me on LinkedIn at Alexandra Rivas-Gale, or you can find out more about Clearbank at clear.bank.
Very good. Nico?
So me, I'm on LinkedIn as well, Nicolas Benady with a I. And if you want to visit our website, it's swan.io.
Very good. And making a all-time great appearance, Val, where can people learn more?
So you can connect with me on LinkedIn, and you can follow OakNorth, and you can visit our website, oaknorth.com.
Very good. Give them a big round of applause. Fantastic. That does conclude this live episode of Fintech Insider News. If you're listening to this at home, please find me on LinkedIn. If you're in the room, you can probably find me by the bar very shortly, I imagine, as well. But thank you very much for listening, and thank you very much, everybody, for coming. Goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralized security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alexandra who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.